Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny and Bert, the Dividend Diplomat. Lately, one sector has been getting absolutely crushed in the stock market. All of the stocks featured in today's video are going to be down at least 9 or 10% in the last month because of a lot of political news, because of a lot of political appointments that are causing some turmoil, some bad news here. But guess what, Lanny? This is going to create a buying opportunity for these 5 stocks, and we're going to tell you why in today's video.
Before we do, smash the subscribe button. Give us a nice thumbs up. Bert's got 5 consumer stocks here. Are they stocks to buy? Is it time to put your hard-earned money to work while these stocks have gotten crushed post-election? Can't wait to dive in with B.
Yeah, this is going to be a fun one here. So again, everyone, we really would appreciate that subscription. And overall, let us know, what sectors are you looking at? What stocks are you buying right now? And then let us know what you think of these 5 companies.
Man, Bert, we got 5 stocks here, man. I'm very excited. How many of these do you own as a teaser?
1, 2, 2. 2 of the 5. Here, and what about you, Lanny?
Surprisingly, 4 out of the 5.
There we go. In the consumer defensive, consumer staple, whatever you want to call it, it's the packaged foods. It's a lot of the goods that you find in your house. You open up your pantry, they're there. You open up your fridge, they're there. They're getting absolutely crushed right now. Inflation's being stubborn again. It's being Italian. It's being like Lanny again. Like we all know, prices keep going up, can't get it quite cooling down. But then also with a new administration, a new person leading health, nutrition, FDA, that's going to put a little bit more focus on cleaning up some of the food, some of the things that make these foods great, but also cheap and profitable for these companies. So that's why you're seeing a lot of their stock prices come tumbling down.
Yeah, couldn't agree more, Bert. But hey, stock prices come down, possibly an overreaction, could be an opportunity that we have at our hands right now, Bert. So what is that first stock here?
Yeah, we're going to split these 5 stocks into 2 buckets here, Lanny. 1 and 2 are going to go together. 3 through 5 are going together. This is the first of what I will call the behemoths, the Goliath. Number 1, Pepsi, ticker symbol PEP.
Oh, yeah.
Is the stock that was on the purchase video that we talked about here yesterday. Pepsi is Pepsi. Don't know how to say it more. They've got the Pepsi brand. They've got, what is it? They've got they've got the water. They got the big soda, the big bottled beverage business, but they also got the snack business. They also have Frito-Lay. They also have the Cheetos. They also have all those snacks that make it a full package company for everybody. But that's also why they're getting crushed right now, because a lot of those foods are processed, a lot of sugar in a lot of their beverages. So they're going to face some scrutiny. They're going to face some pressure, but they're also going to create some buying opportunities for dividend investors like us. Len, you want to rip through some of these metrics here quickly?
Yeah, so for Pepsi, guys, again, trade at 158.62. 815 is the forward expectations for earnings per share. That's a price to earnings of below 20 actually now, which is awesome to see at 19.46. And Bert, speaking to the safety of the dividend, their dividend is $5.42 spread over 4 quarters. Historically, they usually are in that 55 to 75% range. They're at 66.5%. Not afraid. I would still consider this a pretty safe dividend for PepsiCo.
That's right. They always have a strong dividend growth rate too. It's 6.83% for 51 years.
King.
Yeah, and that yield is swelling now to 3.42%, which is above its 5-year average of 2.76%.
Yeah, it pairs up well with that 6.83% growth rate. Now, Pepsi is down 9% the last month, down 8.5% almost year to date. 217 bill market cap, man. What a stock.
Yeah, that's why it's shooting up the watch list here. So let's take a look at that second behemoth, the second conglomerate. We're not going to go very far because we're talking Coca-Cola, ticker symbol.
Little Warren Buffett.
Oh, yeah, little Warren Buffett, the #1 soda brand out there. As much as you love Pepsi, as much as you like the diversification of Pepsi, you cannot argue Coke's international presence and what Coke and Diet Coke mean to so many people. That's what sets Coke above everyone.
Yeah, it's true. It's true. I mean, Coke, Pepsi's got the snack brands, but Coke is kind of winning the beverage war, though it sounds like.
Yeah.
Coke's been down 12.5% in the
Yeah,
last month.
that's a weird coming down. So their price to earnings ratio with that price at 61.74, PE ratio is 21.66, which is above Pepsi's 19.4, but it's low compared to Coke's historical.
Wow. Yeah, but I mean, let's see what else this 12.5% drop has done. The dividend payout ratio, very similar to Pepsi's at 68%.
Yeah. I mean, Coke's always a high payout ratio. Their dividend growth rate 3.78%. They've increased that dividend for 61 years. That's always been the knock up for Coca-Cola compared to Pepsi.
Yeah, I think recently Coke's done better in the dividend growth department comparative to themselves, but they've always trailed Pepsi, guys. But 61 years, they were a dividend king before Pepsi. It's so funny to see. They are now yielding 3.14% over that 5-year yield of 3%. Again, 266 billion market cap, so slightly bigger than Pepsi.
Yeah, so we're moving out of the massive beverage, soft drinks, and some snacks. Now we're moving heavy into the packaged goods, the processed goods, and we're going to find three stocks here in that consumer sector that are showing some very interesting metrics. And I want to say this, Lanny, the reason why I picked these three among a large population of them is because when times get tough, when earnings are getting threatened, when costs are going to go up to clean up the food a little bit, which is where things might be heading, you want to look at that payout ratio. You want to make sure that these companies have lower payout ratios, are for sure below our 60% threshold, where if costs go up, earnings come down, the dividend isn't threatened the way some of these other companies.
Exactly. I
Yeah.
can't wait to get into these stocks here. Man, oh
Yeah.
man, they
Let's
are.
talk.
It's funny because you kind of talked about one a month or 2 months ago, and
Yeah.
it's funny seeing the second time back around on them.
Yeah. And there's another reason why I picked some of these too, and we'll get into their brands. This one, Smuckers, ticker symbol SJ. You're right. We've always loved Smuckers around 100 and in the low hundreds, I should say. That's where we've always historically enjoyed Smuckers. They are down 12% over the last month. They are down 17.48%. So Smuckers is tumbling, and so is that price. The maker of Jif peanut butter, Smuckers jelly, now the owner of Twinkies, right?
Twinkies.
Like,
Yep.
this
Yep.
is probably the hardest one that's going to get hit the hardest when you talk about processed foods getting cleaned up. So that's why Smuckers is tumbling.
Smuckers is tumbling, but the metrics are looking pretty nice. Orville, Ohio, guys, yielding a whole percent above their 5-year yield. So just keep
Yeah.
that in mind for Smuckers,
Yeah,
guys.
that PE ratio is 10.92 now that they're trading at 106.92. That payout ratio is only at 44.13%. And that dividend growth is at 4.35 and increase that dividend for 24 years.
Yeah, again, yielding over 4%, 1% higher than their 5-year of 3%. Again, down 12% last month, down 17.5% year to date, as Bert said. 11 billion market cap, so kind of the smaller of the companies that you'll see here on this list. Little Ohio, little engine that could. But with a name like Smuckers, it has to be good.
That's right. So let's move to number 4 here. Mondelez, ticker symbol MDLZ. We never really talk about Mondelez here on this channel, but they've got a lot of great brands. Let's just rip through them. We'll put the chart up here. We're not going to say them all. They got Triscuits, Chips Ahoy, Wheat Thin, Philadelphia cream cheese, those premium crackers, Ritz,
Fig Newtons, guys.
yeah, Fig Newtons, Oreos,
Premium
Belvita,
saltine crackers.
yeah, everyone loves those.
Who here is doing the saltine cracker challenge?
God, maybe that's what we'll do. And if we get to what 25,000 subscribers, we'll do the saltine challenge.
We still need to iron out a 20K video, guys. So that's a good reminder.
We do. Everyone, throw some suggestions in there of what you'd want to see for the 20K. But before we get out of the brands, we got to talk about my favorite here, Lanny, Sour Patch Kids. Personal favorite here in my household. Unfortunately, my daughters love them too, so I can no longer just eat all the Sour Patch Kids when they come into our house. So,
Oh boy. Oh
yeah.
boy.
So let's go through the metrics here. Let's see what's going down with Mondelez. They're down 10% over the last month. They're down 12.66% over the last year, and they're only up 22% over the last 5 years now. So Mondelez is definitely coming down. Landy, you want to rip through those metrics here quickly?
I would love nothing more than to run through this guy's Mondelez. $64.49. Expected earnings $3.49. A PE of 18.5. But how does the payout ratio look? As we said, Smuckers is at 44%. Mondelez at $1.88 dividend over the 349 EPS is at a 54% dividend payout ratio. Still relatively safe. They've been growing dividends for 10 years, and they've been doing it at an average clip of 10%. Now, Bert, similar to everybody else, they are yielding 2.92%, probably one of the lower yields on this complete list, but also still higher than their 5-year average yield of 2.17%. So almost 75 basis points higher than their historical yield.
Yeah, and that pairs well with that 10.38% 5-year dividend growth rate. So if you're going to have the lower yield, you want to see the higher dividend growth along with it. So that's Mondelez, everybody. That's number 4 on this list, but we mentioned there were 5. So we're going to talk about number 5, General Mills, ticker symbol GIS. They got the Nature Valley Bar, Cheerios, Chex, Annie's products, Pillsbury, Yoplait. Is that Blue Buffalo food, pet food, and Lara Bar. So you know what? What I like about General Mills brands is no matter what happens, these are fantastic brands. They're not going anywhere. They're going to be able to adapt, and they're diversified enough where you're going to pick up some of the people that are pushing towards cleaner products. If you,
You know what's funny? Similar to Jif's, Smucker's Jif is like the king of the peanut butter. There's no question there. Now, Cheerios is the king of any oat cereal.
Mhm.
I mean, I have had plenty of knockoff Cheerios.
Yeah, so Aldi was
When you go back to the Cheerio is just leaps and bounds.
Yeah, I very much agree with that. And that's why I liked General Mills, especially coming into this era. They're down 10.97% over the last month. They're now down 5.3% in 2024. They're only up 20% in the last 5 years. So, yeah, that's why they're here today. That's why they're going through this screen.
They came back with their dividend growth streak once they finished the Blue Bunny merger, and they did very well, obviously, with COVID because of their products are, staples in everybody's cupboards here. So, Bert, what does General Mills look like through the DD stock screen?
Yeah, their price is 63.21, so their PE ratio is 14.02. Payout ratio with that annual dividend of 240, 53.22%. And as you said, they're rebounding on that dividend growth here, Lanny. They've been increasing for 3 years at a 3.96% 5-year average dividend rate. So, Lanny, why don't you finish this off here? What's that yield?
3.8%, which is actually the second highest yielding stock out of the 5 here, yielding well over their 3.08% yield on average, 0.72 margin or 72 basis points, down 11% this last month, down 5.5% this year. They're down, but hey, they're still up 5 years, 35 billion by market cap. So the second smallest company on today's list.
Yeah, so everyone, that's the 5 consumer staples, consumer defensive, whatever you want to call them, the packaged goods. That's where my mind is. Again, Coke and Pepsi are always going to be in their own class. Then you have 3 packaged goods, and the reason why I like them, low payout ratios, fantastic brands, companies that will in the long run figure it out. So let me know what you think of this list and you think of these 5 companies down below.
Guys, like the video, subscribe to this channel, keep investing, keep building passive income, get to financial freedom, guys, because you're either with us or you're against us. Jack, that was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.